Hey, this is Justin with DayTradeTheMarkets.com on Tuesday, August 20th. Wanted to look at the E-mini S&P today, the Russell, crude oil, and talk about how, a couple of things. Talk about how what we call our level 3 relative aggression bars, or extreme buying and selling aggression bars, can really tell the story about the directionality of a market in the short term and help keep you on the right side. Also wanted to talk about this is just my personal favorite reversal type of a setup as well. So what I thought I would do, here's the first half of the day in the ES, where we actually had a pretty nice move before it got pretty quiet in the afternoon. But heading into the day, we've been in a decent down auction, bigger picture over the past few days. I think we've had 4 or 5 days in a row where the market's gone down. Heading into the day, we had yesterday's low was here at right about 42. The overnight low was at 41. So obviously, if we're going to have another down day, sellers need to get through that level. And you can see that early on, we had this level 3 selling aggression bar right there. And just as a review real quickly, the relative aggression bars are just one of the tools that we use in our software, but it's kind of the first building block, or the first step. And what these are doing, well, first of all, we have level 1 or moderate, level 2 strong, and level 3 extreme. We really want to pay attention to these, especially strong and extreme buying and selling aggression bars. Here's the buying version, here's the selling version, because the idea here is that these are typically the beginning of something major or capitulation and the end of something major. So when we see a buying level 3 aggression bar, for example, the first question we ask is, can the low of that hold, and can the high of that, can we have some follow through? If so, then that's a pretty good sign this market's about to be dominated by the buying side, at least until something changes. Same thing on the sell side. Now, if there's capitulation, it's the end of the road. It's kind of like if an airplane takes off and runs out of gas, so to speak. There's only one way it can go. So if you have a buying level 3 aggression bar and there's no follow through higher, and the low's taken out pretty quickly, pretty good sign that the capitulation is afoot. So what this is telling us is, number one, which side, buyers or sellers, is more aggressive, and number two, to what degree. Is it strong? Is it extreme? And that sort of thing. And like I said, that follow through or rejection idea is giving us a pretty good roadmap to the likely short-term direction of the market. So with that said, looking at the ES, the first major extreme structure we had was this level 3 selling aggression bar. And obviously we're getting toward yesterday's low and the overnight low, and if these sellers are for real, we should get some follow through lower, and the high of this should hold. Now you can see we tested the high, didn't even get a full bar above, tested back to the low, but we couldn't even break through, couldn't even buy a ticket through there and go test these overnight lows and yesterday's lows. And then pretty quickly thereafter, we took out the high of this level 3 bar, got a full bar above. And not only that, but soon after that, you can see we got this level 3 buying aggression bar. Okay, so not only did the high of this level 3 or extreme selling aggression bar, it held, and we tested the low. It did our first expectation, but we didn't get follow through. And not only, when it did break above there, not only did it break above, but it did so, we had, a test, we decelerated here, and then we had this level 3 buying aggression bar. So this is one of my personal favorite reversal type setups. You can see where these bars basically overlap is right in this area. Okay, and so this is an area. Whenever this happens, this is a good sign of failure by sellers, extreme aggression coming in on the buy side. Very good sign this market wants to head higher. I like to try to get in right where these bars sort of overlap. And I actually got on board right in there today. I'm not going to tell you that I wrote it all the way up, because I didn't. In the context of this market, I was expecting more down. So if I'm going to be on the long side, I'm going to kind of be in and out of the market pretty quickly. So I took a bit of a profit as we made new highs on that. But this, again, I could have certainly, there was not necessarily any evidence to tell me to get out. I could have waited until there was actually some selling that came in, and I could have done a little better. But part of my trade plan is that when, I'm kind of swimming upstream, bigger picture, I'm going to get out a little bit quicker rather than try to hold. But again, I just wanted to point out that's kind of my personal favorite, reversal type setup where, where these overlap. I'm going to get in a couple ticks above where they overlap. In this case, it could have been a reversal type of a scenario as well. Same or very similar thing happened in crude oil as well today. I'll bring this chart over. Now, the ES chart was a 1 minute. That's what I like to look at is a 1 minute. The crude oil here is a 2 minute. That's what I like to look at on crude is a 2. So again, here's our first extreme selling of the day is some level 3 selling. So we ask ourselves, can the high of that hold? And you can see it did, we tested the high. we couldn't make a new low, and then we actually had an inside, so to speak, another level 3 bar. This time, the high of that bar could not hold, and not only that, but it got taken out with a level 2 and then a level 3. Kind of look at this as kind of one wave of buying. But again, not only was there failure by the sellers at this point, capitulation, but it was reaffirmed when the high was taken out by a pretty strong buying wave. So again, where these overlap, give or take, you have to is right about in there. That's a good spot to be looking for a long type of a setup. Okay, so then as you can see, as this thing moved higher, here's another level 3 buying aggression bar. Low wasn't even tested, high was taken out. Here's another level 3, low wasn't even tested, high was taken out. Here's another level 3. The low was tested. You could see here the high was also tested. This is the first, level 3 selling bar where we couldn't get, it did a nice job of containing the market for an hour and a half or so. We couldn't make any new highs. We couldn't press through there or get any full bars above. So it's not telling us necessarily that selling has come in drastically, but it is telling us that this pure wave of buying that started off of this rejection down here has at least potentially come to an end. And you can see we finally did fail and broke lower on some pretty extreme selling aggression as well. So you can see that. Now the Russell, just to show you this one as well, here is a 2-minute of the Russell, first half of the day as well. This one we didn't really have the same type of rejection early on. We just had straightaway buying that came in pretty early in the session. Again, here is the first major or extreme bar, this level 3 buying aggression bar. It's actually part of a wave of level 3 buying, so I look at that kind of as one. So again, we ask ourselves, can we get some follow through above? Can the low hold? Yes, it did. In fact, it came back down here, decelerated. Here's some more level 3 bars. Here's more. You can see it just keeps going up. When we had some level 3 selling bars that came in, this is our first sign this market could be topping, but you can see in this case, we had no follow through lower. This was a rejection type of a scenario, so we're heading higher. Okay, so it's the same idea of again, this is the first kind of building block that we talk about in terms of making sense of the market, but it's a very good indicator that you can use to, number one, avoid it being on the wrong side of the market, and number two, utilize to help you stay on the right side of the track, so to speak, and stay in a trade as long as, as you see some evidence that your side is still in control, so to speak. So hopefully that makes sense. Again, just these level 3 bars are the first building block. It's something that we really look to do. And again, I just personally I thought I would show that reversal type of a setup. It's really one of my favorites. Here's that idea in crude right in there. And here is the idea in the ES right in here where they overlap. So again, that's just one of my personal favorites. Now, I would have preferred on this type of a day, because heading into the day, the bias was down. I would have preferred this to be the other way around. I would have preferred that early on we had, say, a buying level 3 bar that's low couldn't hold, and then it was taken out by a level 3 selling bar right there. And I know that's blue, but imagine it's this color here. And then where they would have overlapped, right in there, that's where I would have been looking to get short, and that's the type of scenario, because it's in line with the bigger picture bias, where we'd look to be, holding that a little bit longer. So, but certainly either way, it's giving you evidence to help you make better sense. So hopefully that's helpful. Hopefully that makes sense. If you have any questions about this, and again, this can be on any time frame. If you don't like, trading off the 1-minute bars, you could trade on a 10-second bar. You could trade on a 10-minute bar. Whatever, whatever your speed. So. Same logic would apply. So let us know if you have any questions about that, and have a good evening, and we'll talk to you soon. Thanks.